sometime in the middle of June, we had reported that companies which take gold and give you loans, or gold loan companies as we call them, were advertising that people who had pledged their gold were not coming back to take their gold and were selling that gold in the market. There were auctions. And suddenly, about a week back, data came in that India's gold purchases are going through the roof. India's imports of gold in July were 135% higher than the same month last year, and in August it was 82% higher. In the first 5 months of this year, January to May, India's gold jewelry import went up by 200%. What really is happening with this gold rush? One section of the population is pledging gold and unable to redeem it. Another section of the population is buying gold. Professor Ila Patnaik is with us and she will explain this. I'm YP Rajesh, Managing Editor at ThePrint, and welcome to another new episode of Ilanomics. Ila, you have explained very beautifully, for lack of a better word, and also it's a bit technical. Before we go to answer the question why are Indians buying so much gold, you call it a dollar asset. Can you explain why you call it a dollar asset in the first place?
Because the price of gold is linked to the dollar. Because the gold market in India is, we mainly import gold, so very little gold is mined in India. So because we import gold, and even if we were not importing it actually, because it is a tradable, the price of gold is linked to international gold markets. And then we have a duty, whether it's 10%, it used to be 12%, but primarily it's an asset quoted in dollars all over the world. So if you buy gold, then you're in a way buying a dollar asset.
And of course, I mean, the Indians' love for gold has been known. It's not a new love. It's a prized asset. But such purchases in the middle of I wouldn't say middle of a pandemic, but the pandemic has sort of been there with us for a year and a half. Economic activity has been really affected. Consumer sentiment is down. But the desire or the craving to buy gold has not been affected.
So I think there are really two things that are going on. The first is postponed demand, and that is last year at this time you had a lockdown or postponement of weddings. This year again, in the last few months, in the months of April when we had a second wave, weddings were postponed. April and May weddings were postponed, and they are happening now. So this 200% increase is not only on a low base when there was actually a contraction in demand last year in the month of August, but it's also that the bunching up of demand from not, what people didn't buy in April and May and June, is gold being bought now because there were local lockdowns, a lot of shops were shut, and so this demand is a lot to do with that. Over and above that, of course, there's demand for gold as an asset because it's relatively more attractive today compared to other assets, and we can go into the reasons. But, it is this low base and bunching of August for the number that you cited. The numbers
we have seen in July and August. But this whole conversation about gold being that very important financial asset. I was telling you, we were talking to some investment advisors who have compared it to real estate, gold and equities. If you actually look at it over the long term, the appreciation is not as much as equities, but at this point in time, the equity markets are also, I don't know, overheated is the right word, but they are scaling new peaks every other day.
Yeah, so equity markets are certainly have been doing very well, and I think that also makes people think about how the expected returns, that will they continue to do this well. So like we saw in the IPO market, there was a very high demand for IPOs in recent months, and that has started tapering off a little because people do worry whether equity markets continue to do so well as they have been doing at this and can they get these returns. And that is why, even though in the long term, you might see that gold doesn't give as high returns as equity, but you do see people trying to time the market.
Time the market, yeah. And that is something which is, advisors say that never try to time the market. And I will, just give you a trailer of what we will be coming up with in the next couple of days. A very good interview with some of the best financial investor minds in India. You will just track our YouTube channel and Twitter handle for that. But coming back to this investment, options in the market, like for instance, especially for the middle class and the upper middle class, even deposits are not giving much in return.
Exactly.
I mean, rates have all gone really low.
Yeah. So whether it's small savings, whether it's fixed deposits, we currently have loose monetary policy, and that means that interest rates are low, and they've been transmitted to quite an extent to bank deposit rates, where those rates are very low. And so, in fact, somebody looking at the inflation rate, suppose you wanted to buy a cup of coffee now versus you wanted to buy it next year, the inflation rate is higher than the interest rate. So if I was to put this money aside and buy it a year later, I would not be able to buy the same cup of coffee. So in other words, the real return, as economists call it, which is the nominal return, the rate you get on your savings accounts, suppose, minus the inflation rate, is the real return, and that is negative. So people then look for assets whose value will not go down, and for gold is usually the value doesn't go down. So if you look in the long term, even though the returns are not very high, but the value doesn't typically go down. So people then think of gold as a good asset.
Yeah, value doesn't go down, but I guess people don't look at how much it appreciates or compared to other assets, because I guess that kind of education of or understanding of financial investments is not still evolved in
well, I'm not sure. I think people know how liquid gold is. So all the data that we've seen for households who have been borrowing against gold from NBFCs, from banks, and we are looking only the formal part of the market. There's also a very large informal market where you go to your jeweler family jeweler, you go to people in the family and you give them gold and you take a loan. And throughout the pandemic, for the last year or two, people have been using gold, and it's a very liquid asset, and people understand that. So its value lies not just in the returns that they give, but in the very high liquidity and acceptability of gold everywhere, all over the country.
But traditionally, governments, whichever party has been in power, has sort of tried to somehow control gold imports, because also it tells on your balance of trade balance and dollar outflows. And you've talked about how the UPA government increased the duty on gold imports from 6 to 10% in 2013. But that never curbed any gold demand. In fact, it increased gold smuggling.
Yeah. So you see, the main instrument to reduce import of gold, when you think about gold as a financial asset, so I mean, we think for jewelry and needs, and for the gems and jewelry sector as well, it is imported. But when you think about bricks or coins of gold that are mainly gold imported as a financial asset, then you really need to think about what is your domestic inflation rate, how much is the currency expected to depreciate, and that is what tells you about what expected returns on gold are going to be. And when gold starts getting purchased, because we haven't, most of us, even though households are allowed to buy $250,000 a year, but not everybody has done the institutional setup, because that's again costly. So then this is a very cheap way of buying an asset whose value is expected not to go down, and which is pretty much inflation indexed. It is highly liquid, and so you see the demand for gold go up in times like this. And instead of putting curbs on things like smuggling, curbs on import or bans on imports, or trying to destroy the market in one way or another, or putting very high import duty, it's really the macro fundamentals that drive gold. So you get smuggling, all those smuggler movies of from Bollywood. And now smuggling came back after 2013 when you imposed
import
higher duties on gold.
My last question before we go to our viewers who have already sent a lot of questions. There is also, you talk about liquidity, and you talked about the schemes the government started, like the sovereign gold bonds, which was started by the present government. They have not been so successful.
They have. One of them has, one of them hasn't. So let's look at, so there are really two schemes, and there are reasons why one worked and one didn't work. So one is the gold monetization scheme, and in the gold monetization scheme, people are encouraged to go and deposit gold in banks. And then when you want it back, you get a melted gold or a brick of gold. You don't get your jewelry back. And that really meant that if you had an emotional attachment with your jewelry, which a lot of women who own the gold do, then it becomes very difficult, because you lose that shape of gold. So the monetization scheme didn't work so well. While it worked, the limited work where it has worked is for temples who hold a very large amount of gold in their vaults, and they are not giving it back to those with the emotional attachment to gold. And the idea was that this way gold will get recycled, because India imports about 800 to 900,000 tons of gold. 800 to 900 tons of gold, every year. So the idea was this import will come down, because we have around, by some estimates, about 25,000 tons in the country. About 40% of GDP is there already, and so we may not need to do fresh imports if this works. But that didn't work, and I was not at all surprised that didn't work. What did work relatively, though it's a very small percent and it has started and it has some flaws, is the sovereign gold bond,
SGB,
which is linked to the price of gold, over and above which the government also offered a 2.25 interest return on the gold. Now, unfortunately, at the moment, it's not as liquid as you might want it to be. And gold, one of the primary characteristics of gold is the liquidity. So while this one gives you the appreciation, but if it becomes more liquid, if they get traded on if these bonds get traded on the secondary market and it becomes more liquid, then it will also acquire the second feature, which is liquidity, and I think it will do much better. So wherever, so if you are buying gold as jewelry, there's a roughly 25% making charge. Over and above that, you have the risk of theft, or you get a locker and you put it in the locker. Whereas if you or you buy these coins or bricks or whatever, but if you buy a gold bond, hold it in your depository. Then you are really much safer.
Yeah.
So it just has to increase its liquidity. I think it is catching on. It takes, if you compare to how long gold has been around, then the sovereign gold bond has been around for a few nanoseconds compared to that.
Yeah.
So give it time, but it's a...
No, but I was also, thinking about when you say the informal market, where a lot of gold is purchased for cash or unaccounted cash, and that is an arrangement between the jewelers and the people who buy it, but ultimately it ends up in consumption of gold going up.
Yeah.
And it doesn't tell you how much of that cash in the system is accounted and unaccounted.
Yeah. So as long as there's black money, you do have that amount of additional gold.
We'll take questions, Ila. We have members, PB, who's a member for 2 months. Hi, welcome to the show, PB. And he says some naive questions. Does gold held by a central bank factor into a country's credit rating?
Well, it factors into its reserves and therefore into its credit rating as well. So we have about 650 tons of gold or so, and that does get factored in our reserves.
And his second question is, do gold reserves make much sense in this era of high tech? Wouldn't rare earth reserves be more valuable?
Well, I think central banks are very traditional, very conservative. You will not find central banks holding high tech. Central banks are usually trying to portray also the image of being conservative. So for them, it's not really what is better, but it is what conveys the message that they are conservative, they're not taking risks, they're secure, that gold is a traditional secure asset. So I think very little chance of moving to rare earth metals whose prices might fluctuate. So really what you're looking for is something whose price doesn't go down. And I think central banks will continue to hold gold for a while to come.
I'm surprised you didn't say crypto, but we have a question on crypto. But talking about volatility, just going back to, you said, gold prices don't go down or depreciate so much. Just last year, gold prices appreciated so much because a lot of funds flowed into gold because of it being seen as a safe avenue when COVID hit the world and there was lockdown everywhere. Record prices for gold last year, but they have come down. So if you bought gold last year, you would not be richer this year.
Yeah, so on a year-to-year basis, on a day-to-day basis, they fluctuate. But I'm not saying that gold prices can never go down. Yes, they can go down. But given that it is a traditional, considered traditionally a safe asset, it will continue to be something that central banks hold. So for example, central banks tend to hold the dollar more than the euro, okay? And that's all over the world. Why? Because the dollar has become the currency.
It's a default global currency.
Yeah. Whereas you might find more currencies that have less volatility, but that is the default safe currency. Even when the US government goes and borrows like crazy, goes above its own self-imposed debt limits, nobody says that, oh, let's get out of dollar reserves because the US government is borrowing too much and there is a probability of default. People still continue to hold the dollar. So I think many of these things are not based on day to day and year to year. In this case, year to year changes, but more of the long term sense.
Aditya Vishwanath, and this is the question I told you is about crypto. Do you think with upcoming digital currency or cryptos, the shine of gold will reduce?
Not in the short run. Not in the short run. So again, the main characteristic being the price. And if you look at the price of, say, Bitcoin and the way it has been jumping around, it has been very volatile. That is something that anybody who, so if you're holding a portfolio where you want some risk-free assets or low-risk assets, then you look towards dollar or gold, not towards crypto. When you're looking for high returns and you think that crypto will appreciate very fast, then you look at crypto. So I think that there's still a long time to go. Maybe I'm wrong, but my sense is that for a long time, the way people think about risk-free assets or low-risk assets, so at that end of the spectrum, you will continue to see things like gold.
Yeah. And that is exactly what our next member, Kathirvel Mahalingam, asks. Does India's gold rush also indicate that this is due to a lack of knowledge about investing in share markets or stock markets among the common people?
Well, I think it's about financial inclusion. So most households with low incomes, when given an option, and you see this in household data, tend to purchase gold. So even the poorer, the upper end of the poorer household, so this is from consumer and household surveys, they buy gold when they get a chance to. Whereas, for them to set up buying stocks, not only the costs of setting up, but also there's a question of financial literacy. There is a question of how much savings they have. There is a question of financial inclusion. Do they have the trader or the dealers who will do this for them? And there's a question of the size, the average savings that you're doing. So it doesn't work for a lot of households to buy stocks. I mean, there is, of course, inadequate awareness as well. But for a lot of the households, say those under the median income, poorer households or lower middle class, as you might want to call them, they all purchase gold.
So isn't it a good time to launch a gold amnesty scheme? Tarush is asking.
Well, at the moment people are wanting to hold gold.
Why will they give it back?
Why will they give it back? So I think our whole discussion is actually upside down. We are saying that it is at the moment, for a lot of reasons, an attractive asset that people want to hold. So no, this is not a good time.
Absolutely. Vikram Aditya, very simple question. Will gold price go up?
I don't know. It depends on what is your time horizon. In 20 years, I suspect it would, because gold is pretty much inflation indexed. So if you're buying it for 20 years, yes. If you're buying I would say buy a sovereign gold bond for 7 years, and you'll be better off. You'll also get a 2.25% annual return on it, in addition to the link with the price of gold. But of course, I hope it doesn't go up too much, because then that means the government actually has to end up paying more.
Yeah, true. Anish Kumar Singh, what if RBI collected gold from the common people in exchange of interest to the owners? Why would
So
RBI
that was in a way, the gold monetization scheme. That RBI doesn't do it directly, but RBI allowed banks to do it. And that scheme really did not work. And even when it was being launched, a lot of the bankers were, so they need these, when someone goes in with gold, so let's say to RBI, whether they go to SBI or whether they go to RBI, but to the bank and the banking sector, to accept that gold, the bank needs to first test the quality of the gold. If it's not gold, but it's something else, they can't accept it. So they have to set up all that infrastructure. That is costly as well. So they set up a few places where they would accept gold. And really, you didn't have too many households coming up and giving them their jewelry, which they would then get some return on, but not get the actual jewelry back. So it didn't work.
We have some questions not related to gold, Ila, but let's see if we can take and answer them. Saurabh Chatterjee, who's a new member, says, Professor Ila, what are your thoughts on upcoming deregulation in electricity distribution.
Sorry?
Electricity distribution. What are your thoughts on deregulation of electricity distribution?
I'll think about it.
You haven't
let's just stick to what we are.
Gold, yeah.
Let's
So-
stick to the topic of the day.
Okay, so if we have to stick to the topic of the day, I have my last question for you. Are you pro gold?
I don't wear gold.
Okay, no. Do you invest in gold?
I have yet to buy a sovereign gold bond, though it is a good asset, and when I have the savings, then I might consider buying it and adding it to my portfolio.
Fantastic. That should bring us to the end of this conversation on gold and India's gold rush. We will be back next week with another episode of Economics, and please do tune in. Thanks for watching us today.